So, welcome to another episode of Parvez's Trade. And today we'll talk about the future of currency. And we'll talk about the history, we'll talk about the transition, the changes that are happening in the currency market today, and how the currency system will change in the near-term future. So, let's get started. And if you haven't already, in my previous episode, we talked about the New World Order. So we talked about the changing dynamics between the East and the West, how the decline of the Western societies and the upward trajectory of Eastern societies, mainly China and Russia, how that's impacting the financial markets. And when we talk about financial markets, we talked about how the huge pile of debt of Western societies, Western countries, that's being a big problem because inflation is one of the big problems in the Western societies. And I just want to clarify something. So, in my previous episode, we talked about you have the interest that the Western countries are paying on their accumulated debt, that interest payments going up because the interest rates are staying up for a longer period of time. And I talked about how the all the money in circulation is basically equal to the total debt of that uh, currency. So we talked about how if you're paying more interest on your debt, you are creating more money in circulation. And I guess just to clarify on that topic that we talked about in the last episode. So, in the very simplest terms, if the amount of money the government spends is equals to the amount of money the government raises from taxes and everything else, then you don't have a government deficit. Then the amount of money in that currency, the amount of money of that currency in circulation is fixed. However, what's happening in most Western societies, the government are spending way more than what they're raising, what they're earning from taxes. For example, USA, they're spending close to $4 trillion this year, and they raised about 2 trillion, I believe. So they're running a federal deficit of, I think, close to $2 trillion. And so that deficit money, the government basically has to issue new money, issue new bond to raise that deficit, and that brings in new money into the circulation, and that increases inflation. So I guess in simplest terms, because the government because the interest rates are high, the interest and the debt is very high of Western countries. So the interest payments are rising exponentially of Western countries. And the government of these Western countries are not growing their economies fast enough to raise enough money to pay this interest and other obligations and to run a non-deficit government budget, balanced budget. So they're spending too much money. They're having to pay too much in interest because of the high debt level and the high interest rates. And they're not being able to raise enough capital for their spending because the economies are not growing fast enough. And also because you have all these right-wing governments coming into power in Western countries, and they basically want to even lower taxes further, which is just going to add to the deficit. And I know, for example, in USA, Elon and Vivek Ramaswamy, they want to create a Department of Government Efficiency, Doge, and I think, as nice an idea as it sounds, I don't think that'll work because all government spending are approved by Congress. So yeah, Elon can come and say, "Oh, we don't need the, for example, the Department of Agriculture," but and then Congress has to basically pass a bill to approve the cut in spending in that department to get rid of the department altogether. But the problem is all these departments, federal agencies, they have offices in different congressional districts. And so, for example, if the Department of Agriculture has uh, offices in one congressional district of one member of the House, he might vote against that measure because that will reduce the number of jobs in his congressional seat because the agency will be cut. And so that's where the problem comes in. And it's really not as simple as people think that Elon can just come in and cut all these agencies because they do have to be approved by the House and the Senate. They have to be approved by the Congress. Any cut in the agency, any deduction in spending, everything has to be approved by Congress and Senate. And I just don't think they can do it. I just don't think they have the willpower to do it because they're gonna lose a lot of jobs in their own congressional seats. And I don't think there will be enough willpower to go through with that measure. So I don't see these Western countries, for example, like USA is, I just gave you an example, but I don't think most of these Western countries have a serious way of reducing their government spending anytime soon. You know, they have all this baby boomer generation retiring in the next 10 years. That's a big pension bills coming from that. Obviously, we know the pension funds are empty. Uh, Funny enough, hedge funds stole it. And so yeah, big problems are coming in government spending. I don't think government spending cuts are going to happen anytime soon. And because all these right-wing politicians are coming into power in Western countries, they're gonna cut the taxes. So the amount of money these governments can raise will actually decrease. The spending will most likely increase because of all these increased pension obligations, higher interest payments, and all that, and all the debt payments that are coming due. And so the deficit is more likely to increase, and the higher the deficit, more new debt issued, more money in circulation, stagnating GDP basically means hyperinflation or increased inflation because supply of money increases, production stays barely the same, so increased inflation. And I think that's basically what's going to happen in the next few years in Western countries. So I just want to clarify that it's not as simple as high interest payments mean more currency in circulation. But this is where the idea comes from, because when your interest payments obligations are increasing exponentially because of the compound interest effect, and you're not raising enough capital, so obviously it's going to create a higher efficiency, higher deficit, and that will lead to more debt issuance and more currency in circulation. So yeah, just wanted to clarify that, and I guess now we can get into today's topic, which is basically inflation. And I guess the first thing is, sorry, today's topic was currency, not inflation. And the first thing I guess people need to understand when they talk about currency is the history, and I'll just give a short run on the history of currencies. So anything that has a stable level of supply and that has a good stable source of value. So, for example, gold, silver, precious metals, they usually have a stable source of supply, and they were used in the back in the old days as currency. And because this currency, precious metals are heavy, and so if you wanted to move significant amount of currency from one place to another, it was a problem. So they were moving certificates, so you could exchange a certificate with another person, and that certificate will basically say that if you go to this bank or go to this place, you can redeem this certificate for this amount of gold or silver, and those certificates basically then back the gold and silver in those banks or treasuries. And so those certificates were easy to move, easy to transfer, and easy to use everywhere. And that's why the certificates became popular. And those certificates are basically where our modern system of paper money came from. And then in 1971, you have Richard Nixon taking US dollar off the gold standard. And that basically made all the currencies around the world fiat currencies. And fiat is basically a Latin word. It means enforced. So basically, fiat currency is a currency that's enforced by government power and it's not backed by anything. And so that's how we have our current modern system of floating money that's not backed by anything stable, anything of stable supply. And that's where all these problems are coming in of inflation and high debt levels, high interest payments, and all that. And so I guess I just wanted to, that's just a brief history of how we got to where we are right now. And if you look through every aspect, every currency used in the past, all of them have been at some point or another, the link between them and a precious metal standard like gold or silver, that link was broken. And after that link was broken, that currency eventually returned to their original value without that link, which is zero. And that's where we're heading right now, because you can only enforce a currency using government force for so long. And if it's not linked to a precious metal, it's theoretically speaking, and most likely scenario, it will return to its original value, which will be zero. And yeah, and so blockchain, people talk about cryptos, you have meme coins, yeah, we can talk about that and how that's also being a revolutionary impact. And basically, Bitcoin. So I guess the backstory of Bitcoin is, for those of you who don't know, I don't want to mention his name here because this will be on YouTube. But basically, there was this guy in USA who created these small coins made of gold, and they were called, I believe, US Freedom Coin or some Liberty Coin or something like that. And then that person, and those were made from real gold. And so this happened very recently in the last few decades. And he created these coins called US Liberty coins. They're made from real silver and gold. And they're getting popularity because they're actually backed by precious metals, and people are starting to buy them and everything. And he got hit with, I believe, 20 years of jail sentence or something. And that's when this figure, Satoshi Nakamoto, it, it could be one person, could be a group of people, whoever this person is, that jailing of that person is basically what inspired Satoshi to stay anonymous and to create a blockchain technology that will rival this government enforced BS currency that's not backed by anything precious. And the main way Bitcoin works is basically, I believe, every 4 years, so the amount of Bitcoin that's created is reduced by half, I believe, every 4 years or something. So basically, you end up with close to 21 million Bitcoins in supply in the end. And so you have a fixed supply. And because you're using US dollar to buy it, and US dollars circulation supply is increasing, and So you have something, the Bitcoin with fixed supply, and you have buying it with, and it's basically denominated in USD, which is increasing in supply all the time. So obviously, this thing, Bitcoin in fixed supply, will increase in value when denominated in USD. That's just obvious. So, and that's what's basically happening right now. And so when people talk about the future of currencies, they talk about how it's revolutionary and it's changing how people interact and spend money. I know there are places around the world where you can buy almost everything with Bitcoin. And there are a lot of meme coins, obviously. People have asked me, how do you make money using cryptos? And I guess the simplest, it is a big gamble, right? You're basically, it's a pump and dump scheme. Most of the cryptos are basically pump and dump schemes. Bitcoin is different because it has a limited supply, it's open source code, and it's denominated in US dollar, which is increasing in supply all the time. So obviously the price will increase. That's just, obvious. And but most cryptos do not have a limited supply, so you have to be aware of this. Most of the cryptos out there, they don't have a limited supply. And also, so and they're mostly pump and dump schemes, a celebrity or someone will tweet about it, promote it, they'll get in early, they'll dump their own coins before everyone else can. So in that way, most cryptos are pump and dump schemes. But you basically have to realize that uh, not all cryptos have the same characteristics. They have of blockchain technology. There's different technologies out there in the blockchain, and not all of them have a constant supply. Not all of them have this. Even the rate at which their transactions are processed will be different. And so, if you're thinking about investing in any cryptocurrency, I would say that the number first thing you should focus on is whether the supply of that coin is limited. And because, like, for example, Dogecoin, people talk a lot about Dogecoin. It's, Elon Musk's favorite. But what people don't realize is Dogecoin is actually ever increasing in supply. It's an inflationary asset. It's actually not deflationary like Bitcoin. The Dogecoin is, if you look at the prices, it looks similar to a pump and dump scheme, but basically it's a deep inflationary asset because there's a particular amount of Dogecoin that's been created every day, and so the advantage of inflationary asset, we talked about the disadvantage, right? If you hold your currency in an inflationary asset like the US dollar, Dogecoin, the value of your asset is decreasing over time because it's inflationary. That's a downside. That's the disadvantage. There's obviously an upside because when the amount of that currency, in this case Dogecoin, when the amount of that coin in circulation is increasing, it's very liquid. And so transacting in that coin or in that any other currency for that matter is easy. So US dollar, Dogecoin, because the amount of this currency or this coin, because the amount is increasing in circulation, it's a very liquid structure. And so the transaction fees are low, transactions very fast. Bitcoin, because it's a limited supply, transaction speed is actually decreasing and it's supposed to decrease over time. So something like Dogecoin or US dollar or any fiat currency for that matter, or any cryptocurrency with unlimited supply, increasing coin supply, they're not good investment assets. They're good ways to pay for certain things because they're very liquid. They're good ways to trade, but they're not good for storing your asset worth, storing anything of value. Bitcoin is obviously, it can be used to store your value, to retain that value, to increase that value against any other inflationary asset. And so that's the fundamental thing. When you talk about cryptocurrencies, not all cryptocurrencies are the same. Some are inflationary, like Dogecoin. Some are deflationary, like Bitcoin. And then there are meme coins, which are basically pump and dump schemes. And so you have to understand. So you have to, when you're talking about investing in cryptocurrencies, you have to ask yourself, what do you want? Are you trying to put away the money for a few years? Do you want to just buy something using the cryptocurrency? Because those are different objectives, and you can use different cryptocurrencies for those different objectives. And so, yeah, that's just a fundamental idea of how cryptocurrencies work. If you're looking to invest or transact using them, or yeah. And now people have asked me whether the future belongs to cryptocurrencies and whether these fiat currencies are no longer going to be enforceable by force because US military strength is declining around the world, and you have all these wars and conflicts. So how do you enforce your currency if no one listens to you? I mean, yeah, that's all well and true, but I think people also needs to understand that when you make a transaction in a cryptocurrency, that transaction may be secure, it may be independent, no government has control over it, but it's a public transaction. I think that's important for a lot of people to understand. So when you make a transaction through a bank, the only people that can see the transaction is you, the person receiving the money, and the banking regulators and the banking institutions that's monitoring that transaction. When you make a transaction through a crypto like Bitcoin, it's in the public ledger. So it's actually open for anyone to see. And so I think that's fundamental in the adoption of cryptocurrencies going forward, because what that means is if you're someone who likes to keep their transactions private, crypto might not be the way to go. I mean, yeah, you can use fake wallet, someone else's wallet to send the transaction so that they don't know you sending the money. That way, that crypto transaction can be kept private if you don't use your own wallet in your own public name. I get that, but it's really not that hard. Especially if you look at recent cases from the FBI, it's not that hard to find out who the owner is behind the wallet, and it's not hard to find out who are connected to that kind of wallet. And yeah, it's so if you basically if you care about your privacy, sending money using a public ledger like crypto might not be the best idea. But if you're someone who cares about freedom, cares about not being in control of any government, in that sense, you can send money through crypto because you will not be controlled or monitored by any government or any financial institution. But you have to make sure that you are okay with the fact that the transaction's public and people might know. And so yeah, it's not all upsides when it comes to crypto adoptions, right? Where anything with the public ledger is basically public data. And so like the question that I usually get is whether people whether cryptocurrency adoption will be more popular and will the adoption rate increase in the next few years. And really, I think what people need to understand is the the competition to the crypto market is immense. Even if the dollar falls, even if the Western currencies all fall, you have BRICS,